Hello students, welcome to my channel KT's Commerce Classes. Today's topic is cost sheet, subject cost accounting. Cost sheet is what? Cost sheet is a statement which presents detailed information to the various stages of cost and also shows the total cost of the product manufactured during a particular period of time. That weeks, half yearly, yearly, etc. What is the pro forma of cost sheet? Particular amount, raw material consumed. It contains what? Opening stock of raw material, add purchase, less purchase return, add carriage on purchase, less abnormal losses, less closing stock, outer column. Add direct wages, add chargeable expenses or direct expenses, add design expenses, add royalty on production, add higher charge of special plant. Result will be what? Prime cost. Add factory overhead, add opening work in progress, less closing work in progress, less sale of scrap. Result will be work cost. Add office overhead, result will be cost of production. Add opening finished goods, less closing finished goods, result will be cost of goods sold. Add selling and distribution expenses, result will be cost of sale. Add profit, that is sale. Overhead may be subdivided into the following. Number one, production overhead. It includes number one, indirect material, consumable stores. Number two, indirect wages. It contains salary of supervisor, foreman, etc. Number three, depreciation of plant. Number four, repair to plant. Number five, factory rate and tax. Number six, power. Number seven, jute, cotton and waste. Administrative overhead or office overhead. It includes office rent, rate and tax, office salary, management expenses, postage and telegram, printing and stationery, audit fees, legal expenses. Selling and overhead, it includes godown rent, advertisement, carriage outward, selling and distribution expenses, showroom expenses, salesman salary and commission. Following items not to be taken in cost sheet. Number one, provision. Number two, transfer to general reserve. Number three, discount allowed. Number four, interest on investment. Number five, interest on capital. Number six, loss on sale of asset. Let us discuss a cost sheet for January 2022. Raw material consumed 91,000, direct wages 29,000, direct expenses 11,000, factory overhead 80% of direct wages, office overhead 10% on work cost, selling expenses rupees 2 per unit sold. Unit produced and sold during the month 10,000. Also find out the selling price on the basis that profit markup is uniformly made to yield a profit 20% on selling price. Let us discuss the problem. Cost sheet for January 2022. Raw material consumed, how much given in question? 91,000. Direct wages, how much given in the question? 29,000. Direct expenses, how much given in the question? 11,000. Total 1,31,000. It is becoming prime cost. Add factory overhead. What they are telling factory overhead? 80% on direct wages. So direct wages, how much? 29,000. So 80% on 29,000. Result will be 23,200. What will be the result? Work cost 1,54,200. And office overhead. Office overhead question telling what? 10% on work cost. 10% on work cost. Work cost how much came? 1,54,200. Result will be 15,420. So cost of production will be how much? 169,620. Add selling expenses. Question telling 2 per unit sold. So unit sold how much? 10,000. So 10,000 into 2, how much it is becoming? 20,000. So cost of sale will be how much? 189,620. Add profit. Profit what they are telling? 20% on selling price. 20% on sale means sale equals to 100. Profit equals to 20. Cost will be how much? 80. So profit will be how much? 1,89,620 divided by 80 into 20. Result will be 47,405. So sale will be how much? 2,37,25. Here one example has been given. Raw material consumed 4,000, wages 6,000, machine hour worked 1,000, machine hour rate 50 paisa, office overhead 20% on work cost, selling overhead 6 paisa per unit, unit produced 2,000, unit sold 1,800 at the rate of ₹10 per unit. Prepare cost sheet showing cost per unit and profit for the period for 4 weeks ending 30/6/2021. I am solving the problem. Raw material consumed how much given? 4,000. I am writing raw material consumed. Wages how much given? 6,000. Total how much coming? 10,000. That is prime cost. Now factory overhead. Factory overhead. Question telling machine hour work 1,000 into rate per hour. So machine hour work 1,000 into 0.5 equals to 500. 10,005. That is work cost. Office overhead 20% on work cost. Office overhead 20% on work cost. Office overhead 10,500 into 20%. That is cost of production. Cost of production. Now unit produced given 2,000, unit sold given 1,800. Now one formula I will write. Opening finished goods plus production minus closing finished goods. equals to sales. Calculation will be in units. Opening finished good not given means nil. Production given 2000. Closing finished goods not given. Sales given 1008. So closing finished goods equals to 2000 minus 1800 equals to 200 units. 200 units. Now we have to find out the value of 200 units. For finding out the value of 200 units, units produced, cost of production. Unit produced, cost of production. Unit produced how much? 2000. Cost of production how much given? 12,600. For one it will be 12,600 divided by 2000. Closing finished goods how much given? 200 into 200. One two six zero. Less closing finished. Result will be 1134. That is cost of goods sold. Cost of goods sold. Now selling expenses, question telling 6 paisa per unit. Selling expenses, at selling expenses, selling expenses 6 paisa per unit sold. So unit sold is how much? 1800 into 0.06. 1800 into 0.06. Result will be how much? 108. That is cost of sale. Cost of sale will be 11448. Profit, selling price given 10 per unit, number of units sold 1800. So sale 1800 into 10, result will be 18,000. Profit will be balancing figure. Balancing figure 6552. Now we have to find out what? Cost per unit. Cost per unit. Unit produced how much? Unit produced given 2000. Here it will be 2 rupees. Divided by 2000, it will be 2 rupees. For wages divided by 2000, it will be 3 rupees. Total will be 5 rupees. Here divided by 2000, it will be 0.25. Result will be 5.25. Again divided by 2000, it will be 1.05. $6.30 dash. CGS will be also 6.30. 0.06 selling price per unit. 6.36. 10. 3.6. Another problem has been given on price quotation. Material consumed 18,000, wages 16,000, factory overhead 4,000, general expenses 1,900. Show the work cost and total cost, the percentage that the works overhead bears to wages and percentage that the general expenses bear to work cost. What price the company quote to manufacture a machine which it is estimated will require an expenditure of rupees 8,000 in material and rupees 6,000 in wages, and that it will yield a profit 25% on total cost. Now we shall start the problem. Again cost sheet I am doing material consume rupees 18,000. Wages rupees 16,000. Prime cost 34,000. Add factory overhead question telling 4,000. Work cost 38,000. General expenses 1,900. Total cost 39,900. Now again quotient during works overhead bear to wages. We have to find out the percentage of works overhead. I am writing wages factory overhead. When wages is 16,000, factory overhead 4,000. When it is 4,000 divided by 16,000. When it is 100 into 100. 25%. General expenses as a percentage of work cost. Again I am writing work cost, general expenses. When work cost is 38,000, general expenses 1,900. When it is 1,900 divided by 38,000. When it is 100 into 100. Equals to 5%. Now we have to find out the price quotation. For price quotation, material given 8,000. Wages given 6,000. So prime cost will be 14. Factory overhead, %25 on wages. $1,500. Result coming 15,500. That is work cost. At general expenses, how much percent? 5% on work cost. General expenses 5% on work cost, it will be $775. $1,627. Profit that is total cost. At profit 25% on total cost. That is equals to